look at the low today, right there, literally to the penny basically. And again, this pivot line stands out beautifully in terms of, you can see even going back here, this was your high, right? It came up, fell down, and then broke above. You kind of kissed it, broke down, went up, and finally broke out. And now we're coming down to it from the other side. So this level needs to hold. If it doesn't, then it opens up basically a void here where it can come down to this lower level down there. So really important for the bulls to hold the 61,500 level today on a daily closing basis, right? Intraday doesn't matter. I mean, especially with Bitcoin, it can flip around. It could be a one big sell, all those type of things. It's more so on a daily closing basis that really solidifies where that chart was on that day.
The video features Gareth Soloway providing a detailed analysis of the day's financial market movements, covering key indices like the Dow, Nasdaq, and S&P 500, as well as commodities such as oil and gold. Soloway notes that while the stock market was relatively quiet with minor gains, oil experienced a significant decline of almost 2%. He mentions having predicted this drop and discusses the potential implications for future oil prices, suggesting that if economic conditions worsen, oil could fall further to around $64 per barrel. In addition to market indices and commodities, Gareth Soloway discusses the performance of major tech stocks and the cryptocurrency market. He highlights Nvidia's slight rebound following a recent decline, expressing uncertainty about its future direction depending on upcoming earnings. Soloway also focuses on Bitcoin, which is at a critical support level, warning that a break below this level could spell trouble for the cryptocurrency. He reviews historical trends for Bitcoin, particularly its tendency to struggle in September. Finally, Gareth Soloway explores broader market trends and forecasts, including the potential growth of tokenized real-world assets within the crypto ecosystem. While there is some optimism about the future of tokenization, Soloway expresses skepticism about overly ambitious growth projections. He also touches on gold's current stability, waiting for economic data that could trigger a buying opportunity. Overall, Soloway offers a mix of short-term technical analysis and longer-term market outlooks.
Stop. You don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
Our numbers on the day: Dow up 42 points, Nasdaq up 40 points, S&P up 13, and oil down $1.43. Now the one thing here is, number one, these are all pretty quiet, right? Up or down a tenth. This is a tenth of a percent. This is about a quarter of a percent. So very, very light on the markets. But right here, this is more interesting. Oil down to almost 2%. Now, if you were watching yesterday, I gave you the heads up that I pulled the trigger on a short on oil with my smart money commodity service. So obviously they got my exact entry price, all that stuff. But I did give you guys a heads up that the chart to me was a sell short signal. And ultimately today down 2% on oil. So nice move there. Now we are seeing gold today up fractionally on the day. Small move there. And Bitcoin, again, you remember my pivot line? Well, guess what the low of the day was on Bitcoin? The pivot line. So we retraced to the pivot line. As of now, we're holding it, which is really important. The bulls, again, the bulls last stand here, they have to hold the line. If they don't hold that line, we get a daily close below that pivot line. Trouble is on the horizon for Bitcoin. So we're going to watch that very, very closely. Now, just going over to the heat map here, kind of a mixed bag, right? I mean, just like the markets today, generally neutral to positive. Nvidia did have a little bit of a bounce after yesterday's down move. Apple was around the flat line, Microsoft around the flat line, even Google/Alphabet down 0.6%. That's not a big move. Meta, same thing. And then if you go over here, you can see financials again eking out a little bit of upside, generally net positive, while again retail, Amazon was down about 1%. But overall, this heat map, a mixed bag, which is what the numbers told us.
Real Vision's chief crypto analyst, Jamie Coutts, suggests that tokenized real-world assets could reach a valuation of $1.3 trillion by 2030, which is significantly lower than Wall Street's $30 trillion forecast. Despite the more modest projection, this growth could still have a profound impact on the crypto ecosystem, particularly on Ethereum. Coutts' estimate is based on the assumption that the current compound annual growth rate of 121% continues. He views forecasts like Standard Chartered Bank and S&P Global's $30 trillion by 2034 as overly optimistic. While Ethereum remains the preferred platform for tokenizing assets, Coutts notes that Layer 2 solutions could capture a substantial portion of the revenue, potentially limiting Ethereum's direct gains. Nevertheless, the rise of tokenized RWAs, even at a valuation of $1.3 trillion, could create significant ripple effects across the Web3 ecosystem, driving growth in sectors like NFTs and gaming. Despite varying opinions on the pace of this growth, tokenization is expected to play a crucial role in the transformation of traditional financial assets into digital forms by 2030.
So what we saw in the intraday today, again, we did have a slightly lower open, and we can see that right down here. A little bit of a lower open, a float up initially, and then basically look at this. I mean, you could just draw this in the rest of the day. It kind of went tighter and tighter and tighter into the end of the day. And that just shows you the lack of volume, lack of conviction in any direction, right? You know, there weren't any big players that were buying massively. There also weren't any big players that were selling massively. It essentially was a quieter day as it went on, and we talked about that at the open in terms of volume. Now, a couple key charts to look at. So number one, NVIDIA did get a bounce today after the drop yesterday. The key on NVIDIA still remains that it is still below this trend line. But again, the question, and I asked this yesterday to you guys, is this a move up with bullish consolidation, or is this going to get rejected on earnings and go back to this 105 level? After the bell tomorrow, we're probably going to find out. I think NVIDIA earnings, by the way, don't come out till about 4:20. So again, I'll be trading those live with the earnings trader guys. You can find that service on verifiedinvesting.com. But nonetheless, NVIDIA getting a little bit of a bounce after the little bit of a sell-off yesterday as traders, again, positioning themselves for that big result. Now, a couple other things. So here's your oil chart, guys. Looking at oil, you had your bounce, right? We had a classic bounce right here. That, again, was a 50-50. And just to go over the technicals of this chart again, it was a classic wedge pattern. But if you study wedge patterns enough, you start to recognize things. So when you hit a level, all right, so here we hit it once, twice, and three times. All right, here you hit once, twice, three times, and four times. One of the things to recognize is generally first, second, third hits, you get moves that get pushed back against the trend line. So in this case, push back, push back, push back. Here on the downside, when you hit it the first three times, 1, 2, all right, 3. The fourth time, again, is a 50-50. It's 50-50 odds of breaking when you talk probabilities. In this case, we got a bounce, but generally when it hits a fourth time, what do we see happening, right? So like this. Okay, so 1, 2, 3, 4, it gets a bounce, and then it gets a small bounce, and then the breakdown. That's what I'm angling here for on oil. So I expect oil, again, you got your bounce, and eventually it leads to a breakdown. Downside target for me is probably around the $64 per barrel level. Now, the only way oil is going to 64 is if we get some bad economic news. So this implies, if this plays out, that we will see some poor economic data coming out of the charts or out of the economic data points. Now, looking at gold today, gold again, folks, not a whole lot of movement here, a little bit of flat to upside. To me, this looks like a chart that's hovering, waiting for that PCE data, right? Just like NVIDIA is waiting for those NVIDIA numbers, gold is waiting for the PCE data to either spike higher with that 2660 target price, right? Or if it gets rejected, where is it going to go? Where do I buy, or where do I look to potentially buy? Right down on this downslope or slight upsloping channel level. That, again, is your buy level. Now, would I be buying up here? No, I wouldn't be, at least not for me. I don't like to pay up. At some point, there'll be a flush in gold. My guess is with the negative divergence that I'm witnessing on the RSI chart, it might be sooner than later. Maybe even on the RSI, we'll see a little bit of or I should say on the PCE data on Friday, maybe we'll even see a little bit of a dip. So I'm more waiting for the dip as a swing trader to be a buyer of gold. Now, that doesn't mean I don't have my long-term holdings in gold. I've had my long-term holdings in gold for basically a year and a half at this point, a large position on the long-term side. But on a swing trade basis where we're looking to capture moves like this and then rebuy and push it up and then short, down there, much better to wait patiently until we get the chart set up to come through.
Bitcoin has historically struggled in September, closing the month with losses 72.73% of the time over the past 11 years. As August ends with a slight decline, attention now turns to whether the unique dynamics of 2024, including the U.S. election and potential Federal Reserve rate cuts, might challenge these historical trends. September has been particularly challenging for Bitcoin, with 8 of the last 11 years showing losses, including a significant 19.01% drop in 2014. The 2.74% decline in August aligns with Bitcoin's typically subdued performance during this period. The upcoming US election in 2024 could influence Bitcoin's market either positively or negatively, depending on outcomes and investor sentiment. Additionally, a potential rate cut by the Federal Reserve during the September FOMC meeting could act as a bullish catalyst for Bitcoin, especially if the reduction is substantial. Despite the potential challenges in September, October has historically been a strong recovery month for Bitcoin, often seeing significant gains during previous bullish cycles. As August comes to a close, Bitcoin's 2.74% drop has left market watchers eager to see if September will bring better outcomes. Historically, September has not been kind to Bitcoin, with the cryptocurrency ending the month on a downward trend 72.7% of the time over the past 11 years. For more daily dose crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.